because our guest tonight is David Cohen. He's a special guest, maybe the perfect guest for this audience. He's an entrepreneur, a founder of many ventures like um, Uber, Twilio, SendGrid, ClassPass, and many other more. He's a CEO and co-founder of Techstars, a mentorship-based startup accelerator that has helped to fund over 2,000 companies and creating more than $80 billion in market cap. Without further ado, I want to welcome David Cohen to this special edition of CHARLAs.
Well, thanks, Marcelo. It's really fun to join you from here in Boulder, Colorado, with my fake background of Pearl Street, which is where all the startup action is here. Thanks for having me. It's exciting to be with you.
No, my pleasure, David, and thanks for your time and your partnership with your team in helping us with deal flow and many, many things. So let's get started. I know the audience wants to hear about you. David, I mean, you have an amazing career journey, and we would like to hear from you. How did you envision Techstars, and how did you get Techstars to the place it is today?
Well, yeah, it's a little bit of a long story, but I'll keep it short. You know, I've had a few careers. I started as a programmer, just writing code. Always was interested in that from a kid, from the time I was young. I built a few companies where I was the CTO. I had some success and some failure. And along the way, I learned a lot about, you know, what works for startups and what doesn't. And I became interested in angel investing, just like a lot of people that are listening here. And I thought to myself, here I am living in this relatively, you know, beautiful but small town that I live in. Boulder, Colorado is only 100,000 people that live here. How can I be a world-class angel investor in my little small town that I love? How could I help change the ecosystem here to attract really interesting startups to want to work with us? And this led me to the idea for Techstars, which, if you don't know, is the organization that invented the word accelerator. My co-founder, Brad Feld, invented that word. So you have him to blame if you've heard the word accelerator too many times since then. But after having success and failure, I started angel investing. I was dissatisfied with it a little bit. I thought it was hard to find the most interesting opportunities, and I wanted to track them to where I was. So we created Techstars in 2006. It's a mentorship-driven accelerator program that we created. And then we scaled that up over time to go to many different locations. So today we have 50 different locations around the world. We're funding about 500 companies per year using this accelerator model. You know, we do it in Singapore, we do it in Dubai, we do it in London, we do it all across the US, and we'd like to do it in more places in the world. So really, from my perspective, simply was a better way to angel invest and to build communities. And today it's a larger institutional platform where we've delivered great results, and we're about 13 years in. So that's sort of how I got there in my career.
Excellent, excellent. And I heard you're doing a significant amount of work in Emirates, right? And all that area, right?
Yeah, we have some activity there. And I think our accelerators are now in about 20 countries. We're the people that sort of support Startup Weekend, which you also might have heard of. It runs all across the world in about 600 different cities. It's run by volunteers, but it's on our platform and we promote it. So we're really operating pretty much everywhere in the world in one way or another now.
Excellent. It's a fantastic organization. I mean, I think we all here in the audience are amazed about your progress and your presence and your contribution to the startup ecosystem for sure. Dave, I mean, let's talk about the startup ecosystem, right? I mean, we got COVID in the middle of our lives and businesses. And what are the challenges and opportunities you see for investing in startups in the current climate?
Yeah, so I think it's a moment of change as well as a moment of crisis. It's obviously a difficult situation having the pandemic. It's changed a lot. People are learning how to use new services for the first time that they've never seen before, like getting groceries delivered, or they're just experiencing being online more. Everyone's done a Zoom call now. It wasn't true a year ago. And I think that in moments of change, especially sudden change, there are great opportunities for entrepreneurs, and there are also great opportunities for investors. So, about a month or two into the pandemic, we obviously got a lot of calls. We have 2,000 portfolio companies. There's about 2,300 now. You heard that right. A lot of them called us, right? They were asking, what do we do tactically? And of course, we were trying to be helpful like everyone else with the tactics, but a lot of our founders really wanted to be inspired in the moment. And so I'm just sharing a post here in the chat that, if you want to take a look at it offline, I wrote, which was basically to say, what a great time to be an investor and what a great time to be an entrepreneur. Because yes, there's a lot of crisis and a lot of problems going on, but that's the time for entrepreneurs and that's the time for investors. And, there's an associated economic downturn that's sort of primarily driven by, the pandemic. And that also presents opportunities because, the last time that we were coming out of a recession, right, was, 2008, 2009 timeframe. And it's in that moment in 2009 where I was able to invest in more unicorns in one year that I ever have. Right, there were 4 in that year, and I only made about 30 investments that year. So that's a very high hit rate. Why is that? In fact, the first ever Techstars company and the first ever company from any accelerator on the planet that ever went public is a company called SendGrid. It went public for about $1 billion here in the US. It is a transactional email company founded by an immigrant to the United States who happens to have been born in Mexico, I should say. And Isaac, who is the founder, Isaac Saldana, started in 2009 with this transactional email company. So did Twilio, which I invested in. So did Uber, which I invested in, and a few other companies. And why is that? Well, only the tough and only the real entrepreneur and only the person with the real advantage is willing to start a company right now. And only investors who believe that there are opportunities in this moment are willing to invest, but it's easier to find the good deals. So it's a great time to be investing. We can solve the world's challenges through entrepreneurship. It is the engine of job creation and engine of innovation for the world. And we need investors now more than ever to do that. And this is the time where you're likely to find great opportunities. And I tried to highlight that in my own personal experience in the blog post that we shared.
Excellent, excellent. And I share the link with all the attendees. If you are watch your chat section of Zoom, and please, I think it's a great reading. Dave, I mean, we have obviously many angel investors in the audience and many others that are guests and are thinking, do I get into angel investing, right? What does it mean? What recommendations do you have? I mean, any tips, right?
Well, when I first started, I just began to act as if I knew what I was doing. So that would be my tip to you is simply do and you will learn. So when I made my very first angel investment, and again, I'm now thousands into it, but when I made my very first one, I had no idea what I was doing. And so what I decided that I wanted to do is to find someone that I thought knew what they were doing and to co-invest with them. That's why we have these groups, right? Some of you have made investments and some of you are interested in making investments. So think about, following someone that is, more experienced, that has done the work and it doesn't mean you're going to make money. I made a $50,000 US investment in my first ever angel investment. And I was very nervous about it. And I was really excited, right? I waited till I found the one that I really loved. But there were other investors like Brad Feld, who I would end up co-founding Techstars with, who was very experienced, that was also investing, and that made me feel better. But I literally, when I wrote the check, I thought about it as what I called tuition, right? It was money I was paying for my education. That was how I thought about it. And this probably will never work, but I'm going to get the experience and I'm going to be in a deal with people that have done it before and I'm going to learn. And, a few years later, it wasn't super successful. But, about 10 years later, after I had learned much more, I actually got a check back for about $100,000. So my education was profitable.
That's sweet.
Right? It was profitable. It wasn't wildly profitable, But these things take time. I could have put that $50,000 in the stock market and done just as well. But, you know, think about it as just do it and learn and try to do it with people that you feel like have done it before. And then as you begin doing it, figure out a pace and a rhythm for yourself. The best way to lose at angel investing is to do a few. The best way to win at angel investing is to do a lot. So figure out how you can do a sustainable pattern of investing as well.
Excellent, Dave. Great tips. I'm sure the audience are, taking notes as we speak. Dave, we have the opportunity to meet your team as we were preparing for this event, and also they have been extremely generous in sharing deal flow with us, and I was amazed by the generosity of your team and the willingness to help Latinx and Hispanic founders. I know you are thinking about also how to drive diversity and inclusion in the startup ecosystem. What are your thoughts, Dave?
Well, I would say when we first started Techstars, we were not thinking about this. And if you go look at the founders of Techstars, you will not see a lot of diversity. You will see 4 people who come from similar backgrounds and have similar opportunities in their lives, and in fact lived in the same city, right? So not a lot of diversity in general. I wish we'd have paid attention to it earlier, and so we talk to our startups about that now, because we know that not only is it the right thing to do, right, is to include everyone and all of that, but it's actually economically the right thing to do. And that's really the key point, is that more diverse teams produce better results. And that could be, on the dimension of gender, it could be on the dimension of race, it could be, mean a lot of things. And when we think about, as a global company, diversity and inclusion today, it means different things in different parts of the world. And so the way that we express it is that we want our team and our portfolio to look like the world around us, to be representative of the world around us, wherever we are. And we're not there yet. We're working hard on it. We obviously, post all the metrics and do all the work, but, really, I think having initiatives like our current initiative is 1,000 diverse CEOs. We are on a mission to fund 1,000 diverse CEOs by 2025. Now, without doing much different, we'll end up funding about 300, just statistically, right, in our system. But we want to triple that. We want to do much better and really improve, the number of women in our programs, for example, move it up from 23% where it is today up to what the world around us looks like, which is more like 51%, right? So, in that case, not a minority, it's simply representation. In other cases, obviously here in the US, we have a lot of discussion around Black Lives Matter and a lot of racial equality discussion. So here in the US, there's more focus on that sort of activity. But, globally, it's just trying to be representative of the world around you, both with your investments and your own team.
Excellent. No, thank you for that. And rest assured that we are going to continue to work with your team to help you with that, helping each other, basically. So let me take the last 10 minutes I'm sure the audience have questions. So I will ask the audience to raise your hand in Zoom, Zoom hand, right? And see if you have any questions for Dave. Okay, so we have one question from Rafael Granados. Please, Rafael, go ahead.
Yeah, hey, David, first of all, thank you again for joining us. I'm part of the board with Marcelo and the team, and we're super excited to have you on board. Can you talk just a little bit more about repeatability and process in angel investing? I think some of us have been doing it longer. Some of it is that first time, and there's a sense of like, do you hit every pitch? Do you wait? How often do you invest, and how important is process and repeatability?
Sure, I'm happy to try. And this is just, some opinions, right? I mean, I don't think there's a right way. I've seen people make 2 investments and do really well, right? But I think in general, I'm a big believer in diversification, obviously with thousands of investments through Techstars and other means. But, I think that what's important is really, it's more important to have a strategy and to stick to it and to get good at it than it is to try to mimic someone else, right? And I think that what I mean by have a strategy is, define a check size, define a frequency that you can manage as an investor and attempt to be on that pace. Now, don't force it, right? But attempt to be on that pace, because if you think about investing over a 3 or 5 or 8 or 10-year window, you'll have vintage diversification if you do that, right? You'll be investing in good markets and bad markets, and you'll get the benefit of that diversification. You'll get portfolio effect. I'm a big believer that if you're investing in less than 30 companies, it's a challenge, right? It's really hard to make it work. Now that could take a long time. That's okay, but recognize also that startups take time. So, with my own strategy, which was, at first I was writing $50,000 checks. I was trying not to get emotional and occasionally write a $100,000 check. I was trying to stick with $50,000 checks. I had 3 or 4 areas of interest. If the startup wasn't interesting to me, I wasn't going to do it just because it was hot. I had to actually be interested in it, right? And I had to want to help, and I had to like the people. That was my only strategy, right? It was areas of interest. I like the people and I want to help. I'm interested in the thing. And then write a consistent check. Be willing to do, a dozen of those a year, 1 a month. And that would build a portfolio. And I got good at thinking about those topics that I was interested in, and there were only 3 or 4 of them. I didn't look at random stuff. For you, that might be SaaS or it might be something else, right? But it's have a strategy, stick to it, and get better at it. Whatever that strategy is more important than the actual strategy, right? Because you will build a competency in it. So that's how I like to think about it. And the other comment I would make is I was putting money out for about 8 or 9 years before money started to flow in the other direction. Sure, I would occasionally get a small check in year 4, year 5, but in year 8, more money was coming back than I was putting out. So it takes a while for that to happen, right? And you have to be willing to stick with it, because again, if you're going to do it for a year and make 5 investments, that's not a great approach to angel investing in my view.
Thank you, Dave. Great question, Rafael. Any other questions? Raise your hand in Zoom. Okay, I think Eduardo Tobon, please go ahead and unmute yourself.
David, thank you again for taking the time with us here. As you can tell from our growing member-based angel organization here, we can always use this kind of inspiration from you. So one of the things that you've been through is a lot of the cycles up and down, and you've written about them too. What can you tell us in terms of, as we grow the membership of our angel organization here, from a networking perspective, because it looks like we may be starting, to potentially start hitting a patch where there's going to be either less capital potentially available or less competition, those kinds of things you've been through before. What nuggets of wisdom can you share with us as it relates to the next cycle we're going to be going into?
Sure. I would say, it's important to sort of focus on what you can control. And one of the things that we can't control is the macroeconomic environment. And again, having a strategy that plays through that and just views it as this is the vintage that I'm in, and being consistent about that is the best approach, I think, as an investor. And when I think about what's going on in this moment, is there less capital available during a pandemic or during an economic downturn? No, it doesn't seem like it. Are there more deals available at lower prices? Yeah, probably. And that's the beauty of it from an investor's point of view. A lot of people are taking money out of the stock market because they're very nervous about that. And they're putting it in long-term investments. Well, startups are an interesting long-term investment. So, I have another post I'm just sharing here that shows some of the data from around Techstars. We're consistently seeing, 10, 15 companies a month going through a financing, and that's been consistent through the pandemic. We're seeing companies being bought, right, at the same pace as before. So, while we would think that there's a lot of disruption, actually there's more opportunity because there's more disruption. So I think it's a bad time to pull back. I also think it's a bad time to speed up, right? Have a strategy and stick to it. And I think that, in terms of capital availability, yes, some people will get nervous. Some VCs will pull back. Some angels will say, I'm going to wait a little bit. But our data shows that in general, that's not happening. And that's global data that I just shared if you have a chance to look at it.
I've seen that data before when we were waiting for starting the event, and I really recommend you look at the numbers because it's impressive, right? It shows exactly what Dave was explaining. Maybe we have time for one more question. I'm just looking here at the chat. I will try to synthesize two questions in one. This question is coming from, I would say, Adela Cepeda and Emma Rodriguez. What kind of characteristics do you look for in a startup team? Which are the red flags, right?
Well, you know, when companies apply to Techstars, we number the applications, right? Number 1, number 2, number 3, we number them sequentially. And we only fund the odd ones because we believe you have to be lucky to be an entrepreneur. No, I'm kidding. It's just a joke. It's not true. It's not true. We look for lucky entrepreneurs. No. Look, I think we talk a lot at Techstars, and if you've been around at all, you've heard team, market progress idea, right? Super heavily focused at the early stage on the team. We think that the right team in an interesting market is going to figure it out. So we look for, what does team mean? You know, people always say that. Well, they have the skills, they have the, the right to be in the game, if you will, right? They know how to create the thing, and they have some insight. But I like to look for entrepreneurs that I feel like were put on this planet to do this thing, right? They're just so excited about the vision of the future that they have. And that was the case for me with Uber, right? I invested in Uber before they had a single car on the road. The vision that Ryan Graves had, who's the initial CEO that I met, was an enormous vision. And it was a picture of the world in the future. And I really liked Ryan. I had experienced his give first attitude. He had mentored at Techstars. So that was an easy one for me to say, this is exciting and big, and it matches one of the things I'm interested in, which is that marketplaces that have lots of middlemen are going to be disrupted by the beauty of the internet. So, I think we look for intrinsic motivation, not financial motivation, but I want to change the world. We look for the skill set, right? And we look for just obsession with the product. It's easy to fake passion. It's very hard to fake obsession because you actually do stuff all the time. You're so obsessed with it. So look for that. From my perspective, that's what we do.
Excellent, Dave. Look, I mean, I'm looking at the chat. I mean, there are many more questions. Unfortunately, we don't have additional time, but let me thank you again, Dave, for having this time with us. Thank you for all the help you have given us in terms of deal flow and support. Looking forward to keep the collaboration going with Techstars, and have a great weekend in beautiful Colorado, Dave.
Thank you. My pleasure. Have a great event. And I'm going to put my email address in the chat if anybody would like to communicate. I'm happy to hear from you.
Thank you, Dave. Thank you very much.